Welcome to your deep dive. Today, we're going back in time
Back in
to
time.
the early 20th century,
Wow.
the era of legendary stock operator Jesse Livermore.
Oh, yeah.
You know this guy.
I do.
All right. So we'll be using his autobiography, Reminiscences of a Stock Operator,
Right.
specifically the annotated edition that you provided.
Okay. Yep.
And we're going to uncover Livermore's insights
The
on
bat.
speculation, market manipulation, and kind of the psychology behind trading
Yeah, all that good stuff.
and the psychology of the markets themselves.
Yeah.
This book was a page-turner for me.
It was a great one.
I was highlighting something
Oh, really?
in nearly every paragraph.
Yeah.
Livermore started young, trading in the Wild West of bucket shops.
Oh, yeah.
Can you paint a picture of this world for our listener?
Yeah. So imagine this. Unregulated betting parlors disguised as brokerages,
Oh, wow.
designed to really prey on inexperienced investors. That's what bucket shops were.
Sounds shady.
Very shady. They were very shady.
So how did he get started there? How did he even find these places?
Well, back then, information traveled differently. It was more word of mouth, you
Yeah.
know? And so he probably heard about these places through some of his connections, people he knew in the streets, in the neighborhoods. And I think what attracted him to them was, he was young, he was eager to make money,
Yeah.
and this seemed like a quick way to do it.
A get-rich-quick scheme.
Yeah, exactly. He was looking for that edge. And these bucket shops, they promised that, you could come in with a small amount of money and turn it into a fortune.
But they were rigged, right?
Oh, absolutely. They were rigged against the individual trader. They were designed to take your money.
Wow.
So it's not surprising that he eventually, had to move on to more legitimate venues.
So it sounds like Livermore himself compared them to casinos.
Yeah, he did.
And I found that kind of ironic
Interesting.
that he saw this as a good thing.
Yeah, it is because, casinos, they're all about, the house winning, and these bucket shops were the same way. But I think for Livermore, he saw it as a necessary evil.
A training ground.
Exactly, a training ground. It was where he cut his teeth, so to speak. He learned some valuable lessons in those bucket shops, even though they were shady.
So in a way, the bucket shops, as shady as they were,
They
became his training ground.
They did, his training ground.
He really honed his skills there.
Absolutely. He honed his skills. He learned to read the tape. He learned to control his emotions, which is so important in trading.
Yeah.
And he developed his own unique trading system.
It's fascinating that he was able to kind of extract those valuable lessons from such a shady environment.
It is.
But I guess that speaks to his kind of ingenuity.
Yeah, his adaptability. He was able to see through the smoke and mirrors and figure out, okay, how can I use this to my advantage?
So he wasn't just gambling. He was actually analyzing, strategizing.
Oh, absolutely. He was studying the market, even in that rigged environment.
He didn't just fall for the hype.
No, he didn't.
He dug deeper.
Exactly. He dug deeper. And that's one of the things that sets him apart, from the average trader, even today.
So he even turned the tables on some crooked bucket shop owners, using their tactics against them.
Oh, yeah, he did.
He was really cunning.
He was very cunning, very sharp.
Do you have a specific example of that you could share with our listener?
Absolutely. Take, for example, the time Livermore cleverly tricked a bucket shop into closing his sugar trade just before they could manipulate the price to wipe him out. He was very, very quick and cunning.
So he saw what they were doing.
He saw it.
He was able to outmaneuver them.
Exactly.
And I imagine this was not a one-time thing.
No, this happened multiple times.
He was constantly having to kind of
outsmart
stay one step ahead.
Stay one step ahead. That's right. And it's amazing because he was so young at the time.
And that probably gave him a real sense of confidence, that he could
absolutely
beat the system, so to speak.
It did.
But, eventually he had to move on to bigger things.
Right.
So he conquered the bucket shops.
He did.
And then he set his sights on the real stock market.
The big leagues.
Imagine that was a whole different ballgame, right?
It was a whole different ballgame. The real stock market, it's not rigged in the same way that the bucket shops were.
Right.
So he couldn't rely on the same tricks.
It was a whole new set of challenges.
Exactly, a whole new set of challenges. And he quickly discovered that beating the real market, was far more complex than outsmarting a bucket shop.
So what did he have to learn? What were some of the...
Well, he had to learn to anticipate market movements.
Okay.
He had to grasp broader economic forces at play,
So it wasn't just about individual stocks anymore.
No, it was the bigger picture.
He had to understand how the whole system
The
worked.
whole system, exactly. And he had to, constantly refine his trading strategy.
And that's where his encounter with the phrase, it's a bull market, comes in.
Yeah,
Right?
right.
It seems pretty basic now, but it was a real turning point for him.
It was.
Can you tell our listener, what can our listener learn from this aha moment?
Yeah, so you're right. It seems pretty basic now.
Right.
But for Livermore at the time, the seemingly simple phrase, it's a bull market, was pivotal.
Yeah.
It forced him to recognize the importance of understanding the overall market trend. Because up until then, he'd been so focused on, individual stock movements
Okay.
that he was missing the bigger picture,
Right.
the overall direction of the market.
So he was too focused on the trees.
The trees, not the
very-
forest, exactly.
Yeah.
So it's a great lesson for anyone trading today. Don't get lost in the details. Pay attention to that overall market direction.
Okay.
That's crucial.
And during this period, when he was transitioning from these bucket shops
Right.
to the real stock
The
market,
big leagues.
he crossed paths with some really characters.
Oh, yeah, he did.
Old Turkey and Deacon White, for example.
Those names.
I mean, they sound like they're straight out of a movie.
They do. They were larger than life.
Can you tell our listener
Of course.
a little bit more about them?
Yeah, so Old Turkey, he represents the seasoned investor, the one who's been around the block, seen it all.
The wise old sage.
Wise old sage. He understands the cyclical nature of the market, the ebb and flow,
The ups and downs.
the ups and downs. And then you have Deacon White, who he embodies the honorable side of Wall Street.
Okay.
He emphasizes the importance of integrity and character, even in this, cutthroat world of finance.
So they both kind of represent different aspects,
Different aspects.
but also, I guess, of human nature, right?
Absolutely, human nature.
The good and the bad.
The good and the bad.
Okay, so he had these positive encounters,
Right.
but he didn't always encounter honesty, though.
Unfortunately not.
There's that crazy story about how he got tricked into staying out of the market,
Oh, that one.
which ended up costing him a lot.
Yeah, big time.
Can you refresh our listeners' memory on this story?
Yeah, so this is a story that really highlights the dangers of trusting the wrong people, even on Wall Street.
Right.
So Livermore, he had this broker, a guy named Dan Williamson.
Yeah.
And Williamson, he convinced Livermore to hold a losing position, hold on to a stock that was going down.
Okay.
Now, Livermore, he trusted this guy, but what Livermore didn't know was that Williamson was secretly benefiting his own family members.
So there was a conflict of interest.
Big conflict of interest. Williamson's brother-in-law had just passed away, and he was using Livermore's money to basically prop up the estate.
Wow.
So he was sacrificing Livermore's profits to benefit his own family.
And that's just one example, right? I mean, this kind of manipulation was
This was happening all the time.
rampant.
Rampant. So it's a stark reminder that manipulation can come from even the most unexpected sources, even people you think you can trust.
Even people in positions of authority.
Exactly. So it highlights that dark side of Wall Street that persisted even back then. And to be honest, it still exists today.
Yeah, we're going to see that as we dive deeper into Livermore's story.
Absolutely.
So we've seen manipulation at play early on in Livermore's career.
Right.
But interestingly,
Interesting.
he wasn't just a victim.
No, he wasn't.
He later became a master manipulator himself.
He did.
And I'm curious about that. I mean, how did somebody go from,
From being the victim.
being taken advantage of
Yeah.
to really understanding how to use these tactics to his advantage?
Yeah, it's fascinating, isn't it? It's like, you learn from your mistakes, you learn from the people who wronged you. And Livermore, he was a quick study. He went from being manipulated to understanding how to use manipulation to his advantage.
Okay.
But it's crucial to note that he did believe in a difference between unethical tactics and legitimate market making.
Okay.
He wasn't just out to fleece people.
So how did he go about it? I mean, did he just pump up the price of any stock you could get his hands on?
Not at all. He had a more nuanced approach.
Okay.
He believed in aligning manipulation with actual value. He wasn't trying to, create hype out of thin air. He wanted to showcase the potential that was already there.
So give us an example. How did he do that?
Okay, take his involvement with Imperial Steel, for example.
Okay.
His strategy there focused on generating genuine buying demand through strategic trading,
Go for it.
positive news flow, He was basically trying to create a a buzz, a legitimate buzz.
So it was like a form of marketing, you could say.
Yeah, you could say that.
He was marketing the stock.
Marketing the stock, showcasing its potential.
But he was also manipulating the market to
Make sure that people saw that potential.
Right.
To highlight it. So it's a fine line, you know?
And that raises a fascinating question for our listener.
Yeah.
Where do we draw the line
That's the question, isn't it?
between legitimate market promotion and outright deception?
It's a tough one.
There's a very fine line there.
Absolutely. Livermore's story, it raises this question without giving us a simple answer. He understood that manipulation could be a powerful tool, but it needed to be used responsibly, ethically. And that's the challenge, isn't it?
Right.
To figure out where that line is.
And that's a question that we're going to continue to explore
Absolutely.
as we dive deeper into Livermore's story.
We will.
So stay tuned for that.
Stay tuned.
It's fascinating how Livermore's story, it still connects to the market, even today.
Oh, it does.
So much of what he experienced back then,
Right.
it still resonates with how markets function now.
Yeah, those underlying principles,
Yeah.
they haven't changed all that much,
No.
even though the tools and technology have, you know.
So are there any particular stories or examples from his life that really highlight that for you?
Well, take the Panic of 1907, for example.
Okay.
Livermore, he actually profited from that crash.
During a crash.
During the crash. Because he anticipated it. Yeah, he was down in Florida at the time, living the good life.
Living it up.
Living it up. But he still had this sense.
A sense of impending doom.
Impending doom, yeah. About the market. He couldn't ignore the economic signs.
So he wasn't just completely checked out.
No, he was still paying attention. He was still reading, you know, the financial news. He was still talking to his contacts.
Boy.
He was still in the game mentally.
And even though he was physically removed, he was still plugged in.
He was plugged in. And it's interesting, there's this anecdote where he was down there and he was actually placing a trade. And even the telegraph operator who was sending his orders overheard what he was doing and warned him against it.
Warned him against selling.
Selling, yeah. He said, you know, this stock, it's going to skyrocket. Why are you selling?
So even people who weren't necessarily like sophisticated investors,
right?
They were caught up
in the frenzy.
In this speculative frenzy. And he was able to kind of see through that.
He was. He believed the market was headed for a fall, even though everybody else seemed to be, you know,
bullish.
Bullish, yeah, super bullish.
But he held firm.
He held firm to his analysis. And you know what? He was right.
What happened?
The market crashed.
And he made a killing.
He made a killing. While many investors, they were wiped out.
Wow.
Livermore, he profited. And that demonstrates his ability to trust his analysis, even when facing a lot of opposing viewpoints.
That must have taken incredible courage and conviction.
It did. It's a powerful reminder that sometimes you have to go against the crowd.
Your gut.
Your gut, yeah. Don't just follow the herd.
For yourself.
Think for yourself.
He had nerves of steel, it sounds like.
Nerves of steel. But, you know, he didn't always win.
Right, he was human.
He was human.
He mentioned some significant losses as well.
Oh, yeah, he did.
And I'm wondering, you know, what can our listener learn from those? What are some of the key takeaways from his failures?
Yeah, so Livermore, he was very open about his failures, which is, I think, really admirable.
Yeah.
He didn't shy away from them. He talked about them openly.
He embraced them.
He embraced them, yeah, as learning opportunities.
So tell us about one. Give us an example.
Okay, so he lost a lot on a coffee trade, for instance, even though he was sure his analysis was sound.
Okay, so he did his research.
He did his research. He thought he was right, but the market, it didn't agree with him.
It went against him.
It went against him. And instead of, you know, cutting his losses early, he held on.
He doubled down.
He doubled down, hoping that it would turn around, but it didn't. And he ended up losing a lot of money. He held on for 9 months.
9 months?
9 months, yeah, before finally accepting the loss.
Wow.
It's a crucial lesson in knowing when to cut your losses and move on.
Don't get too attached.
Don't get too attached. Sometimes you got to just walk away. And he even had that great quote about how postmortems and speculation are a waste of time. You know, dwelling on the past doesn't help you in the future.
Learn from it.
Learn from it and move on.
So he made mistakes, but he always tried to learn from them.
Absolutely.
And he didn't let them hold him back.
No, he kept going. He was resilient.
He had another run-in.
Oh, yeah.
With some powerful insiders.
Oh, this is a good one.
At the American Steel and Wire Company.
Right.
And he started shorting this stock.
He did.
Believing it was overvalued.
Overvalued, yeah.
But the
The
insiders,
insiders.
they weren't too happy about that.
No, they weren't. And they were led by this infamous figure, John W. Gates.
Okay, I know that name.
Yeah, notorious guy.
Notorious for...
For being ruthless, for being, a master manipulator himself.
Okay, so this was a real battle of the titans.
It was. Livermore, he was going up against, the establishment,
Yeah.
the powers that be, and they tried to squeeze him out.
How so? What did they do?
Well, they started buying up all the stock.
To drive up the price.
To make his short position really painful.
So it sounds like a real, like, David versus Goliath scenario.
It was. Livermore, he was David in this case.
And he's sticking to his guns?
Sticking to his guns. He was convinced that his analysis was right.
Yeah.
And you know what? In the end, he was vindicated.
What happened?
The stock crashed. And Livermore, he made a fortune.
Wow.
It's a great example of how independent thinking and sticking to your convictions, it can pay off.
Especially when going against
The establishment. Big guys.
Now, you've mentioned reading the tape several times.
Right.
Can we break that down a little more for our listener?
Absolutely.
What does that actually mean?
So back then, the tape was the ticker tape, right?
Okay.
This paper strip that printed out stock prices
Okay.
and trading volume.
In real time.
In real time. And Livermore, he was a master at observing these movements.
So he would just sit there and watch this tape go by.
Watch it go by.
Yeah.
And from those movements,
Yeah.
he was able to interpret market sentiment.
So it's not just looking at the numbers.
No, it's more than that.
It's understanding
The story they're telling.
the story behind the data.
Psychology.
Okay. So in today's world
Yep.
of,
Yeah.
high-tech trading platforms, is that concept still relevant?
Oh, absolutely it is. We have much fancier tools today, no doubt.
Right.
But that core principle,
Yeah.
it remains relevant. So instead of a ticker tape, right,
Yeah.
we have these price charts, volume data,
Right.
all these fancy indicators. But it's still about understanding
Psychology.
the psychology,
The emotions.
the emotions behind those movements.
Okay.
So if you're looking at a chart,
Yeah.
you're not just looking at the lines going up and down. You're trying to understand, why are they going up and down? What are the emotions that are driving the market?
That's fascinating. So what else can modern traders learn from Livermore's approach? What other kind of timeless wisdom did he have to offer?
Well, his insights on money management are as relevant today as they were back then.
How so?
Well, he was adamant about the importance of protecting your capital.
So don't risk everything on a single trade.
Exactly. He even compared trading without a stop-loss order.
What's a stop-loss order?
It's basically an order that automatically sells your stock if it hits a certain price.
Okay.
So it limits your losses.
Okay.
He compared trading without a stop-loss order to driving a car without brakes.
That's a powerful analogy.
It is, right? You wouldn't do that.
No.
You need those brakes. And in trading, your stop-loss order, that's your brakes.
Makes sense.
What else? You also stressed diversification. Don't put all your eggs in one basket.
Right, the old adage.
The old adage.
Don't bet the farm.
Exactly.
Spread the risk.
Spread the risk.
Okay.
And perhaps most importantly, he believed in understanding your own risk tolerance.
So know yourself.
Know your
Know your limits.
Your limits. You shouldn't trade with money you can't afford to lose.
Right.
And you should only take risks that you're comfortable with.
Right.
This goes back to his emphasis on emotional control, which we talked about earlier.
Yeah.
You have to be in control of your emotions.
Wow.
Otherwise, you're going to make bad decisions.
Let your emotions get the better of you.
Exactly.
He seemed to really believe that emotional control was the key to success in trading.
Oh, absolutely. He understood that fear and greed,
Yeah.
they're the two most powerful forces in the market. And they can lead to really irrational decisions.
Because you're not thinking clearly.
You're not thinking clearly. You're letting your emotions drive the bus. And he had that famous quote. He said, "The market doesn't beat them, they beat themselves."
Meaning?
Meaning, these traders who lose money, they're not losing to the market.
They're losing to themselves.
They're losing to themselves, their own emotions.
Because they can't control.
They can't control.
Their fear and greed.
Their fear and greed. He said, because though they have brains, they cannot sit tight.
So discipline is key.
Discipline is key.
Patience.
Patience. Being able to control those emotions, that's what separates the winners from the losers.
Now, speaking of losers,
Oh.
there's that story with the bucket shops in St. Louis.
Right.
I mean, they actually refused to let him trade
They did.
because he was too good.
too good.
That's incredible.
It is.
How does that even happen?
Well, he had built up this reputation, right, as being this incredibly skilled trader. And these bucket shops, they're in the business of making money.
Right.
And they realized that Livermore, he was a threat to their bottom
He
line.
was winning too much.
Winning too much, taking their money.
So they just said, you're out.
You're out. They literally locked him out. They wouldn't let him trade anymore.
Wow.
Yeah. And there's this memorable encounter he had with a character named H.S. Teller,
Okay.
who ran a chain of these bucket shops. And Teller, he was a straight shooter. He basically told Livermore, he said, I make my money coppering suckers' bets, and you don't belong here. I aim to be a sport, and you're welcome to what you pride off in us. But more of that would make me a sucker now that I know who you are, so toddle along, Sonny.
Wow. Talk about adding insult to injury.
Right. But, Livermore, he took it in stride. He knew he had outgrown these bucket shops.
Yeah.
He was ready for bigger things. So he moved on to the legitimate stock exchange in New York, determined to apply his skills in a more regulated environment.
So he didn't let this setback discourage him.
No, he didn't.
He used it as motivation.
Motivation to prove himself on a bigger stage.
And he knew he still had a lot to learn.
Oh, absolutely.
But he was confident in his ability to read the market.
Read the market.
To understand the psychology.
The psychology.
And that's really what set him apart. Now, he definitely had this knack for spotting opportunities.
He did.
And I'm thinking about that story
Another one.
where he had to wait 2 weeks
Oh, yeah.
to buy into a stock.
In 1915.
Yeah, he was bullish on
Right.
in 1950. And even though he was broke at the time, he still held back.
He held back, yeah. Waiting for the perfect moment.
So what was going on there? Why did he wait?
Well, he had this rule.
Okay.
He wouldn't buy a stock until it broke through a certain price level,
A resistance level.
a resistance level. He called it the pivotal point.
Okay.
And he believed that once a stock broke through that point,
Yeah.
it was a sign that the big money was moving in, and that's
Yeah.
when he wanted to buy. So even though he was eager to get in,
Yeah.
he had this discipline
Discipline.
to wait. And it paid off
It did.
big time. The stock took off.
And he made a killing.
Another killing. It shows his evolving approach.
Oh.
He was learning to balance his instincts with patience
Yeah.
and calculated decision-making.
So this wasn't just the impulsive young trader from the
No.
bucket shop days.
He had matured.
He had matured.
Okay. He was thinking more strategically.
And that's a powerful lesson for our listener.
It is.
Sometimes the best trades
Or the ones you don't make.
are the ones you don't make.
Yeah.
It's about waiting
Brain.
for the right opportunity,
The right setup.
the right setup, and having the discipline
To hold back until then.
until then. And, it's easy to get caught up in the excitement.
Right, the FOMO.
The FOMO, yeah.
Yeah.
But Livermore, he understood that true success in speculation,
Yeah.
it requires more than just gut feeling.
It requires a plan.
A plan,
A strategy.
a strategy, and patience.
And patience.
It's about respecting the market
respecting the market.
and understanding that it dictates the terms, not the trader.
Right.
We're not in control.
We have to play by its rules.
Its rules. We can't force it to do what we want.
You have to adapt
To its rhythms.
its rhythms. And Livermore, he understood that.
So we've talked a lot about, Livermore's successes,
Right.
the lessons he learned
From his mistakes.
from his mistakes.
Yeah.
But there's also this fascinating aspect to his story
Oh, absolutely.
regarding his views on market manipulation.
Market manipulation.
Because he wasn't just a victim of it.
Yeah.
He actually embraced it as a tool.
He did. He saw it as an inherent part of the market.
Okay.
But he drew this clear distinction between unethical manipulation,
Unethical.
which aims to deceive,
Right.
and legitimate market making,
Okay.
which involves highlighting a stock's true potential.
So he believed there was a right way
A right way
and a wrong way
in a wrong way.
to influence the market.
Influence the market.
So how did he differentiate between the two?
Well, for Livermore, ethical manipulation,
Yeah.
it was about aligning your actions with the actual value of the stock.
Okay.
You weren't trying to create this artificial hype.
Right.
You were trying to showcase the potential that was already there.
So it was more like, we were talking about marketing earlier.
Right.
It was more like a sophisticated form of marketing.
A sophisticated form of marketing, yeah. You're educating the market
Educating the market.
about the true value of this company.
But you're also using your influence
Your influence
to shape that perception,
to shape that perception.
to make sure that people see what you see.
Exactly. So can you give our listener an example
Yeah, give us an example.
of how he put this into practice? Okay, let's go back to Imperial Steel.
Okay, his favorite.
His favorite. He orchestrated this sophisticated campaign to boost the stock using strategic trading,
Yeah.
positive news flow, He even carefully timed leaks of information
Oh, wow.
to create this sense of momentum.
So he was really playing the game.
He was playing the game, but he wasn't trying to mislead investors.
Right.
He genuinely believed in the company's potential,
Okay.
and his actions were aimed at demonstrating that potential to the market.
So he was kind of like a conductor of this orchestra of information
Of information and emotion, yeah.
and perception.
He was shaping the narrative.
It sounds like a very nuanced and complex approach.
Very complex. He was essentially acting as a kind of a market psychologist. He was using his understanding of crowd behavior
Right.
to influence perceptions and ultimately the price.
And again, it makes you wonder about that fine line
The fine line.
between, strategic marketing
Strategic marketing.
and outright manipulation.
Outright manipulation.
There's a lot of gray area there.
A lot of gray area. And Livermore's story, it doesn't offer simple answers,
Right.
but it does raise these important questions about the role of psychology in the markets
Right.
and the ethical implications of trying to influence that psychology.
So what can our listener take away from Livermore's experience with manipulation? Is it something to avoid entirely, or are there valuable lessons to be learned?
I think the key takeaway here is that understanding how manipulation works, it can help you identify it,
Protect yourself.
protect yourself from becoming a victim. Livermore's story, it provides this fascinating glimpse into the tactics used by both manipulators and those who try to exploit them.
Right.
So by studying his experiences, we can learn to recognize the warning signs,
The red flags.
the red flags,
And hopefully make more informed investment decisions.
informed decisions.
So it's about developing a more critical eye,
Absolutely.
a healthy skepticism
Skepticism, yeah.
when approaching
When approaching market information.
market information.
Yeah,
Because not everything is as it seems.
exactly. Livermore's story reminds us that the market is this complex and often opaque environment.
Right.
And it's important to be aware of the different forces at play.
The different players.
The players, the motives.
Before making any investment decisions.
Before you put your money at risk,
Yeah.
you got to do your homework.
We've been focusing a lot on Livermore's successes
Yeah,
and his insights.
right.
But his story also has kind of a darker side.
Yeah, it does.
His later years were marked by both personal and professional struggles.
Absolutely. He faced multiple bankruptcies.
Oh, wow.
And he struggled with depression and addiction.
It's hard to believe
Yeah.
that someone who achieves so much
Yeah.
could also experience
Such lows.
such lows.
Yeah.
And it all culminated in a tragic end
It did, yeah.
when he took his own life.
It's a sobering reminder that even someone as brilliant and successful as Livermore wasn't immune to these kinds of challenges.
I mean, it really underscores that
Yeah.
financial success.
Right.
It doesn't guarantee happiness or fulfillment.
No, it doesn't.
Right.
And it's crucial to prioritize mental and emotional well-being,
Absolutely.
even when chasing profits
Yeah.
in a demanding field like speculation.
His story is a powerful reminder of the human cost
It is.
that can sometimes accompany the pursuit of wealth and success.
It can consume you if you're not careful.
So despite the tragic elements of his story,
Right.
what can we learn from Livermore? What's his legacy?
Well, I think despite its tragic elements, Livermore's story is also one of incredible talent, resilience, and a relentless pursuit of excellence.
He was a true legend of Wall Street.
Absolutely.
And his legacy continues to inspire and intrigue us.
For sure.
One thing that really stands out to me is his emphasis on observation and experience.
He truly believed that the best way to learn about the market was to immerse yourself in it.
to really experience it firsthand.
Firsthand, study its movements
Yeah.
and learn from your mistakes.
He was a master of reading the tape, as we discussed earlier.
Absolutely.
But he also recognized the importance of understanding a company's fundamentals.
Right. He wasn't just a technical trader.
Right, so he wasn't just looking at charts and graphs.
No, he dug into the business itself.
He did his research.
He did his research.
So it wasn't just about intuition or gut feeling for him.
No.
It was a combination of technical skill, fundamental analysis,
Fundamental analysis.
and a deep understanding of market psychology.
A deep understanding,
Yeah.
yeah. You know, he knew the market was driven by emotions,
Yeah.
and he was incredibly skilled.
And using that to his
To
advantage,
his advantage, yeah.
that's what made him such a formidable
A
force.
formidable force, yeah.
Speaking of market psychology,
Right.
I'd love to hear more about his views on market manipulation.
Yeah.
He experienced it firsthand as both a victim and a perpetrator.
Yeah. Unique perspective.
So what did he think about it?
Well, he believed that manipulation was an inherent part of the market,
Okay.
but he emphasized that there's a right way
Right.
and a wrong way
And a wrong way.
to go about it.
Okay.
He distinguished between unethical manipulation, which
Well,
aims to deceive investors,
okay.
and legitimate market making,
Okay.
which involves showcasing a stock's true potential.
So he believed in transparency,
Transparency.
honesty. Honesty was essential to him.
Yep.
He was wary of manipulating the market with false information. Right.
And often criticized the media
Oh, really?
for its role in creating hype and swaying public opinion. He really encouraged investors
To think for themselves.
to think for themselves.
To do their own research.
Do your research.
That's a valuable lesson for our listener,
It is.
especially in today's world of information overload.
Oh, absolutely. You know, we're bombarded with information from all sides.
Yeah.
It's crucial to be critical of the information we consume
Yeah.
and to base our decisions on careful research and analysis.
Don't just believe everything you read.
Exactly. Livermore's story is a reminder that we need to develop our own informed perspectives.
Our own perspectives.
On the market, don't just follow the herd.
And that's a great segue to another key takeaway
Okay.
from Livermore's story.
What's that?
The importance of developing your own trading philosophy.
Your own philosophy.
He didn't just follow the crowd.
Hey,
He
yeah.
carved his own path
His own path, yeah.
based on his unique experience,
Right.
observations, and
Observation.
insights into human psychology.
He was a pioneer, in a way.
Yeah. He was constantly evolving his approach,
Adapting.
adapting to changing market conditions,
Right.
refining his strategies.
Refining his strategies.
He wasn't afraid to experiment, learn from his mistakes,
Great.
and continuously improve.
He was always learning.
So he was a true innovator
Absolutely.
in the field of speculation.
The true innovator.
And his example teaches us
Yeah.
that
Yeah.
finding what works best for us
Yeah.
requires
Constant learning.
constant learning and adaptation.
Adaptation.
Yeah, there's no one-size-fits-all approach.
No.
I'm also thinking about his emphasis on risk management.
Oh, yeah. He was big on that.
He felt very strongly about that.
He did.
He often compared trading without a stop-loss order
Right.
to driving a car without brakes.
Without breaks. Yeah.
Which, I mean, that really kind of drives home the point that
It does.
you need to have
Mm-hmm.
a plan.
You need to
Limit your potential losses.
to limit your losses.
He was also a firm believer in diversification
Diversification.
and understanding your own risk tolerance.
Know your limits.
Know your limits.
Don't risk more than you can afford to lose.
Right, because speculation is inherently risky.
It is.
And he understood that managing that risk effectively
Yeah, absolutely.
is crucial for long-term success.
Long-term success, you got to stay in the game.
You got to stay in the game.
You can't blow up your account on one bad trade.
Right.
You got to be able to weather the storm.
The ups and downs.
The ups and downs.
He also had some insightful views on the role of luck in speculation.
Oh, yeah. Luck
While he acknowledged that luck could play a role
in the short term.
in the short term,
Right.
he believed that
Just skill and discipline.
skill and discipline were the ultimate determinants of success
In the long run,
in the long run.
you make your own luck.
He had that famous quote, "Luck is what happens when preparation meets opportunity."
That's a good one. So you got to be prepared.
Be prepared.
Do your homework.
And then when opportunity knocks,
You're ready to seize it.
but also recognize that even the most skilled traders,
Yeah.
they experience periods of bad luck.
It happens.
It's inevitable.
It's part of the game.
So you can't let it get you down.
No, you got to stay focused.
Stay focused on the long
That's
term.
the long game.
Livermore's approach.
Right.
It wasn't about quick wins or get-rich-quick schemes.
No.
It was about developing a sustainable approach, a
Sustainable.
long-term game plan
Long-term game plan.
based on
Careful observation.
sound judgment,
Sound judgment.
disciplined execution.
Disciplined execution.
It's a process.
It is a process.
It's not a destination.
Well, I think we've given our listener a lot to think about.
I think so.
Livermore's story is both captivating
Yeah.
and cautionary.
Absolutely.
He achieved extraordinary success,
But also made costly mistakes
costly mistakes,
and ultimately met a tragic end.
a tragic end.
So it's a reminder that
Mhm.
speculation is a high-stakes endeavor,
It is.
one that demands not only intelligence and skill,
Right.
but also emotional control,
Emotional control.
discipline, and a deep understanding of human nature.
Human nature.
It's a reminder that success in the market
Right.
doesn't guarantee happiness
Well,
or fulfillment in life.
No, it doesn't.
And it's crucial to prioritize
Or well-being.
our mental and emotional well-being,
Mental, emotional.
no matter how engrossed we become in the pursuit of profits.
Absolutely. I think the most important lesson we can learn from Livermore's journey
Yeah,
is that speculation is a continuous process,
the process of learning.
adaptation, and refining our approach based on experience.
So it was a journey.
A journey, not a destination.
There will be setbacks,
There will be setbacks.
but the key is to learn from them
yeah, learn from them.
and emerge stronger
Stronger.
and wiser.
Wiser.
He embraced the challenges of the market,
He did.
and he saw them as opportunities for growth.
Opportunities, yeah.
He was constantly learning,
Constantly learning.
refining his approach.
Refining.
And that's a valuable lesson for any trader or investor.
It is. And remember, as Livermore himself said,
Yeah?
the game teaches you the game. There's always more to learn.
Always more to learn.
So stay curious.
Stay curious
Stay disciplined.
and never stop exploring
Never stop exploring.
the fascinating world of the markets.
We hope this deep dive has provided you with valuable insights
Some food for thought.
into the world of Jesse Livermore
A legendary figure.
and the timeless principles of speculation.
Timeless principles.
Until next time.
See you then.